Welcome back to Bitcoin Treasuries. I'm here with Glenn Cameron, the global head of Onramp Institutional. Thanks for joining us today.
Thanks very much for having me, Tim.
Can you give us an overview of your professional background?
Sure. So it's a little over 25 years ago now that I started in the investment management industry. I actually started a prop trading firm, trading government bond futures and swaps, and also euro dollar futures and swaps. But it's not a long-term thing being a trader. I studied up and became a chartered financial analyst and moved into the investment consulting world. I worked for an American firm here in London called Wilshire Associates, and gained a lot of experience there over 5 years. I ended up working with a couple of sovereign wealth funds and a couple of central banks. And then I moved on from there and I became the head of an investment consulting team at Old Mutual. And there was mainly pension schemes, mainly defined contribution pension schemes, also some mining rehabilitation trusts, some foundations. And then after that, I became a portfolio manager, and I was kind of constructing bespoke portfolios, mainly for pension schemes again. And then more recently, I took a role as an investment consultant, but where my remit involved being head of digital assets, because at the previous firm, I kind of set up their Bitcoin infrastructure for them. And then very recently joined Onramp in the role you mentioned. So here I'm essentially acting as a bridge between traditional finance and the world of Bitcoin, and kind of on the advisory side, how to integrate Bitcoin into portfolios, and then going right down into operationalizing and implementing it, in the most safe and robust way possible.
Coming from traditional finance, what first drew your attention to Bitcoin?
So I'd kind of heard about it and had discussions with friends about it, and I was interested in it. But what really kind of piqued my interest was a conversation I had with a fixed income manager. And he was a guy I really respected. He ran some fixed income arbitrage funds as well as a long only fund. And I knew he knew what he was doing when it came to markets. And once we had lunch together, and he confided in me that he was making big allocations of Bitcoin in his personal portfolio, but wasn't doing anything in the professional space. And it kind of made me wonder, geez, if a guy of this sort of caliber is making big allocations in his own portfolio, what am I missing? And he pointed me to the Bitcoin Standard. Read that book, and it was kind of a real paradigm shift for me. And then that kind of led down the Austrian economics school rabbit hole, because in one of my roles, I'd headed up the asset allocation committee, and we'd been doing a lot of macroeconomic analysis. So the sort of Austrian economic view of the world really shook that up. And then the final kind of step for me was understanding the technical underpinnings of Bitcoin. So, proof of work, difficulty adjustments, consensus algorithm, and all that kind of stuff. So it wasn't like it was over a period of time that I kind of really got, full conviction in Bitcoin. That took some time, because often when I was discussing with people, they would ask me questions and I didn't really understand what I was talking about. So it was a journey for me.
Did you face skepticism from colleagues and clients when you first started being a proponent of Bitcoin? And if so, how did you end up navigating that?
Yeah, I mean, huge amounts of skepticism everywhere, right? both internally with colleagues and externally with clients. I mean, the media's got a lot to do with it, right? And it's also, and the thing is, there's no real understanding of the assets. I'm generalizing, of course, but with a large majority of traditional finance or investment professionals, they just kind of know the headlines and, they think it's, I mean, you can appreciate it from somebody's point of view who doesn't really know anything about the asset, right? It's like this digital thing. What is it? I don't understand this thing. How can it possibly have any value? And they just think that people who are involved in this asset or proponents of this asset are delusional and kind of getting caught up in some kind of, frenzy or fad or something like this, right? Mm-hmm. So that's kind of the point that you start at. And I mean, so the thing is to go from there, and also with clients, right? I mean, a lot of the clients, they're looking for stability, income, and when you look at Bitcoin on a standalone basis, it just looks like it doesn't belong in an institutional portfolio at all. Can lose 20, 25% of its value in, a day. And then kind of climb all the way up. It looks kind of like, a video game or something compared to, traditional assets or something like that. That's the kind of starting point when you get into a conversation with colleagues and stuff like that. And I mean, I can remember actually going to an offsite with the investment team, and we were allowed to present on whatever we wanted to present on. And I chose Bitcoin, right? Mm-hmm. And, essentially people just thought I was absolutely crazy. So, so it's been a long journey, and it's taken a lot of staying power to stick with, what I knew to be true.
Hey guys, this episode is brought to you by Onramp. Bitcoin custody is evolving. Both self-custody and single third-party custody come with significant risks and trade-offs. Onramp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your setup. Onramp secures your Bitcoin in a segregated, cold storage, multi-sig vault, guarded by 3 independent institutional-grade custodians, none of which have unilateral control. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. To learn more, schedule a consultation with the Onramp team. Go to www.onrampbitcoin.com. How did you initially weigh Bitcoin's risks and rewards compared to traditional assets, and has your view of that balance between Bitcoin and traditional assets evolved over time?
Yeah, so I mean, you initially look at it on a standalone basis and you're like, this thing's super volatile. Then you look at the, the volatility or the standard deviation, and it's like north of 60. And, and when I first started looking at it, quite a few years ago now, there wasn't institutional grade custody for the asset. You were like, how would you even, operationalize this in a portfolio or anything like that? But one of the things about Bitcoin that keeps making you look at it is its resilience. No matter what happens to Bitcoin, it just keeps coming back, and it keeps coming back stronger. And that's what kind of got me into looking at it more deeply. And I would also from my fixed income trading days, I knew that, when markets are more volatile, you make smaller position sizes, right? When markets are quiet, you up the position size. So like I started thinking about the position size for Bitcoin in a portfolio, and also looking at its correlations, its skewness, its kurtosis, all of the higher moments of its kind of return distribution, and kind of thinking about how to integrate it in a portfolio. And then kind of, playing around with back tests, with different types of portfolios for pension schemes or endowments, or depending on the investment objectives and the income drawdown on the portfolio. And that was kind of when the light bulb came on for me. Was essentially, it's just about getting the position size correct. Like, how much income are you really drawing from this portfolio? How long is your investment horizon? Those kinds of things. And then also factoring in the 4-year cycle. Because I think that, another thing that kind of I realized was, everybody's got to start somewhere with Bitcoin, right? And in a pension scheme, you're looking at small allocations, probably at the top end, 5%, bottom end, 0, 1%. But there's an asymmetric upside. So, for example, if you put 2% of Bitcoin in a pension scheme portfolio, even if something catastrophic happened, like a sort of a bug was discovered in the Bitcoin software that was catastrophic or something like that, the most you can lose is 2% of your portfolio, right? But compared to the upside, right, where you've got an asset that can a global asset that can 10 or 20x, right? You don't come across a lot of those opportunities where you got high conviction, right? Mm-hmm. So that's how I kind of changed my view of the risk and the reward. Was, this is not something you want to bet the farm on in a institutional portfolio, but it is certainly, even if you can have a 2% allocation to one equity in a portfolio, right? And that's a company where anything can happen. They can get disrupted, they can be fraud, something can go wrong. So the risks are kind of similar in my mind now.
What is your core investment thesis for Bitcoin, and how do you communicate that to professionals that are more accustomed to traditional asset classes like equities and bonds?
Yeah. So when I look at markets today, what I see is everything is kind of overvalued, right? If you look at equities, like if you look at a kind of a long-term and stable valuation metric, like the CAPE ratio, cyclically adjusted price to earnings ratio, you'll see it's only been more expensive once, and that was at the top of the dot-com bubble. If you look at credit spreads, they're the narrowest they've been almost in history. If you look across asset classes, they are very richly valued. And I think what's going on is there's a monetary premium in all of them, because essentially people are using these assets, their houses even, as money. And that's because of the debasement that's going on. We actually did a exercise for a client where we were saying that CPI isn't being, it's not a correct measure of inflation. People don't actually understand that the original definition of the word inflation was an increase in the money supply, right? Mm-hmm. It was only when kind of John Maynard Keynes and that crowd came onto the picture that they kind of redefined the word inflation to mean a rise in prices. So if you actually look at the rate of increase in the money supply, if we use the US, for example, it's about 7% per year over the last 60 years. And if you look at the last 20 years, it's closer to 12, right? So if the S&P 500, that's the rate at which your money is getting diluted. So if the S&P goes up by 11, 12% a year, it's essentially just keeping up with the pace of the rate at which your money is being diluted. And so, people are looking for places to store value, right? And, and essentially just, and with all the passive flows, people are just contributing to their pension schemes every month, and that money's just getting allocated according to some sort of long-term strategic asset allocation. And everything's overvalued. And I think what people don't understand about Bitcoin is that it is a perfect monetary asset. And so as people realize that, there is a risk that it acts like a black hole and it sucks the monetary premiums out of those other asset classes. And if you've got a portfolio that doesn't have an exposure to the asset where those monetary premiums are disappearing into, right, then you're on the wrong side of that equation, right? And I think reframing the situation like that so that it's not you're taking a speculative bet on this thing, Bitcoin going to the moon or something ridiculous like that. But it's more that there's something with the lowest stock to flow ratio of any asset in history, right? That is gaining global significance, right? And even nation states and large financial institutions are getting involved now. And you don't have exposure in your portfolio. And there is a risk that, especially on a sort of monetary supply adjusted basis, your portfolio doesn't keep up.
You were the head of digital assets at the investment consulting firm, one of whose clients was the first British pension fund to make an allocation to Bitcoin. How did the idea of allocating to Bitcoin come up with the pension? Was it you proposing it? Was it client driven?
Yeah. So it was us proposing it. It was kind of an interesting situation because it wasn't the only pension scheme we had proposed it to. But this one kind of went differently to the other ones. And the main reason was it's a defined benefit pension scheme. And it was the pension scheme for a manufacturing company. And the trustee board was kind of employer nominated trustee kind of heavy. And also the chair of trustees was the financial director at the manufacturing business. And they were in a very competitive industry. This is the company. And their margins had just been absolutely squeezed, particularly over the kind of COVID period where, everybody knows what central banks did. And they couldn't raise prices because of competition. So their margins just got absolutely decimated. And so, knowing that about them, when I spoke to them, I kind of came at it from the point of view of, what is money? Let's go back to the unit of account and understand from first principles, is inflation like the weather? Is it just sort of random and it's, a hot day today? Or what is actually causing this inflation, right? And explaining to them a little bit about the history of money and how, before the issue, current era of sort of fiat currencies, government, money by decree, and when money was a competition in a free market for money, what were the characteristics of a money that kind of outcompeted the others? And, explaining that the difficulty of producing more of that thing being used as money was the defining characteristic of what went out, and how that related to something being good store of value. And then showing them how Bitcoin kind of met those characteristics. And because of the context in which they were operating the business, and the fact that the trustees, were all, well, not all, but most of them were employees in the company, and they understood very well what had happened to their business. It was quite eye-opening to me that people don't actually understand where inflation comes from, right? So I think it was quite eye-opening for them too. And so it was kind of a different experience from other places where I'd kind of broached the subject where, it didn't really land. But in this situation, they were like, we get this, we're interested. And they pretty much, at the end of a 2-hour kind of session with them, made a decision in principle that they wanted to do it. There was a lot more that went into it after that, but that was the initial kind of way it went. And we also did it in the context of their whole portfolio, and we were talking about, 1%, 2%, 3% allocation. So, yeah.
What was that education process like for the pension committee? Like, what were their biggest concerns, and then how did you address each of them?
Yeah. So after that initial meeting, then they made a decision in principle, but because they had a sponsoring company, they had to go to the sponsoring company's board of directors and kind of raise this with them, and there were some injections there. So we had to deal with those. And the way we did that was by kind of social proofing the proposal. So essentially showing them that, luckily, through 13F filings and the Bitcoin ETFs, it was easy to get data on how many institutions had actually invested in Bitcoin up to that point. And it was over 1,100 institutions, including banks, and obviously, BlackRock, Fidelity, Invesco, Frankel, Templeton, all being proponents of Bitcoin, kind of helped with that social proofing. We kind of put together a 4-page report, and then, 30 pages of 1,100, all kind of split into entity type: bank, hedge fund, asset manager, wealth manager, etc. And that kind of calmed the situation down. And then once we'd got the local company kind of comfortable, they then reached out to the international parent company. And then we had to go through the exercise again, got everybody comfortable. And then it was really about legal, tax, and it was also about operationalizing. So how are we going to, what's the vehicle we're going to use to, make the allocation. Yeah.
Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. What have been the key objections when you're proposing an allocation to other pensions, such as volatility, regulation, custody, and how do you address those concerns?
So it's, they kind of tropes by this point. They're cliches. If you're a proponent of Bitcoin, you've heard them 1,000 times. It's bad for the environment. It's used by criminals. It's too volatile. Those sorts of things. And so generally, if people will let me get this far, what I'll do is I'll kind of run them through an intro to Bitcoin like I did with that other pension scheme. And, I'll kind of face a lot of resistance. But then I will use, because in the institutional space, particularly on this side of the Atlantic, ESG is kind of a big thing still, although I think that's starting to change. But so I'll use that kind of ESG framework, and I'll go through the environmental side of Bitcoin and actually give them the facts, and show them how Bitcoin is actually friendly to what they're proponents of. I'll also go through the social implications of Bitcoin and talk about the unbanked around the world, the number of people living in authoritarian regimes. I'll mention in passing CBDCs, and I'll kind of put a human rights lens on it and point out that there's really no other way to invest if you want to impact human rights around the world. And then the last part is, and because usually one question always comes up, and this is the key question for me. If I get this question, I know that I'm close to getting people on board, which is, how do we know that the supply cap cannot be changed? How can you be so sure? We're humans, humans change their minds all the time. And if I get that question, it means that pretty much they're starting to see the thesis, and now they just kind of dotting the I's and crossing the T's and kind of saying, hang on, okay, if I believe everything that you say, then this is now something that I'm interested in, but I don't believe this one fundamental factor. So there I will, and I'll frame it under the heading governance, and I'll take them through how the technology actually works in a sort of user-friendly way. Kind of explaining the consensus algorithm, how the SHA-256 hashing algorithm works, how mining works, how the difficulty adjustment works, all of that kind of stuff, and show them that through the assets decentralized, or the network's decentralization, it's near impossible for the rules of the network to be changed.
Why do you think institutional investment consultants recommending Bitcoin are still so rare? Is it regulatory uncertainty, reputational risk, or is it maybe just a simple lack of understanding?
Yeah. So I think it's the politics of working in traditional finance and the stigma and the kind of reputational risk that comes along with that. It doesn't matter what the reality is, what the truth is, right? If everybody thinks a certain way, right, and they won't give you the time of day to actually explain things to them, right? If they presume they already know, right? Then if you're secretly, understand Bitcoin and whatever, and then you come out and say, you think we should be making allocations to Bitcoin or whatever, of course, there's a risk with the leadership in the firm, with your colleagues, with your clients, etc. It's all of a sudden they're like, I really thought this guy knew what he was doing or whatever. Now he's proposing this crazy thing, right? And so I think that's a lot what it is. I mean, obviously, there's also there's no understanding of the asset, right? It's just, and I also think another thing is that, investment professionals to varying degrees, depending on where they are in career, have spent they've invested a lot in what they know and what they understand. Mm-hmm. And then along comes this thing, and it kind of challenges a lot of what you think mm-hmm. Right? And it also takes a lot of work and a lot of time, and you've got to look into an area where there's no demands on you to look into this area, right? So you've got to do it of your own accord, right? To get to this point where you actually understand that, it's not a Ponzi scheme, And so I think that is starting to change, because, now all of a sudden BlackRock is involved and Fidelity are involved. And so again, I would say the very large majority of investment professionals are still kind of it's easier to dismiss it. And, I've spent so much time getting to where I want to. I don't really want to learn anything. I think I already know what I need to know. But I think as the sort of pioneers in the space kind of move in, as well as BlackRock and more institutions get involved, all of a sudden that kind of dynamic is going to shift, and it's going to be like, do I want to be the last one to figure out what's going on here?
Right.
Yeah.
As more institutions and pension funds start to consider Bitcoin, what do you see happening in the next, say, 3 to 5 years? Do you think we'll see more progressive allocations, or just kind of a lip service to that end?
I think in the institutional space, we'll see more and more. In the corporate space, I think we're going to see more and more companies getting involved, making allocations in their treasuries. I think that's the kind of area where we'll see the most happening quickest. I think in the institutional space, it'll be slow, and as a percentage, it'll be quite small percentage of, say, pension schemes or endowments or sovereign wealth funds will do it, but they'll kind of break the ice for the ones that come later. And I also think that because of that, that's where the alpha lies, right? If you are ahead of the herd and you kind of figure this out, it's just like people talk about the nation state game theory of Bitcoin. It's the same, it's the same thing, because this is a strictly scarce asset, right? If you figure it out early, that's where the alpha is. And I think as well that, you see it every cycle, right? Bitcoin goes on this tear of a bull run. It has these major pullbacks where, the critics will kind of, use that as proof that Bitcoin is whatever they say it is and whatever. And then, with each cycle, it makes higher lows and higher highs. And they don't really understand why that's the case. They don't understand the 4-year halving cycle, all of that kind of stuff. But I think with each cycle, and now it's kind of moved into this institutional adoption phase, it kind of draws more people in. So I don't think this cycle is going to be the big one for institutional adoption, but I think it's going to be, material. I think it's the next cycle where we're going to kind of see, people are going to have watched all of this and sat on the sidelines. And I also think the percentage allocations in portfolios are likely to be small this time around. And then we'll see the early adopters kind of increasing those allocations, down the line.
For pension funds or institutions that are considering an allocation, what advice or best practices would you offer them before they jump in? And are there any pitfalls that they should avoid?
So the first thing is you got to start with the education, right? Because the thing is, so it's quite interesting over here to become a pension trustee. A lot of pension trustees are like, the IT guy, or, they don't really know anything about pensions. About investments, and that's why they hire investment consultants. Mm-hmm. And when they get trained to be trustees, they've got to do like a trustee kind of education program. And the investment section or whatever is, they get told like every quarter when you meet as a trustee board, kind of look at the assets versus their benchmark, and then if you see consistent underperformance, have a discussion about whether you should remove that fund or whatever it is from the asset allocation, these sorts of things, right? And so there's sort of a investor behavior element to this, which essentially means that you've got to start with education. They've got to understand this asset. They've got to understand its volatility, so that later down the line, you're not dealing with a trustee board or an investment team who don't understand the asset and don't understand that the way it's behaving is the way you expected it to behave in the portfolio. And they've also got to look at it in a portfolio context, not as a standalone asset, right? Then also to help with that, I would say collaborate with experts. And when I say that, I mean Bitcoin experts, right? Because there are a lot of generalists in the space holding themselves out as experts, but, at the same time, kind of proposing Polkadot or Cardano or something like that. And if somebody doesn't understand the difference between those two assets, then in my book, they're not an expert, right? Also, start small. Right, you want to get everything operationalized correctly. You want to kind of get used to the assets and stuff like that. Later with a plan later to increase the allocation. And then I would say the most important thing is choose the right custody solution. Right. So when we did the British pension, right, we looked at over 70 different options around the world over an 18-month period. And, I obviously have my own Bitcoin in my personal capacity, but in a multi-sig solution. And I was like, it's crazy that I can't find a multi-sig institutional solution, right? Why would I want the pension scheme's assets with one custodian when you've got an asset here with the technology around it that you can spread the ownership of the asset across more than one custodian, right? And so that's what I was searching for. Took a long time, and it's actually how I ended up working at Onramp, because Onramp were pretty much, well, I think they are the only Bitcoin asset manager that provide native multi-sig technology where the keys are held by institutional grade custodians. Because also in that process, if I always say to people, if you go and look at the S1 filings for the Bitcoin ETFs, right? What you'll see if you search for bankruptcy, the word bankruptcy, and you'll see a lot of stuff about FTX or whatever. But when you get to the point in the risk disclosures where they're talking about the bankruptcy related to your investment, right? What they tell you is that the law around digital assets, custody, and bankruptcy, remoteness of that custody, they're relying on a thing called Article 8, but actually it's going to be decided by a court. So if the custodian goes bankrupt, there's a risk that the Bitcoin ends up as part of the bankruptcy estate of the custodian, right? So you look at a lot of these ETFs and who's the custodian? It's Coinbase, right? And individuals who know what they're talking about wouldn't leave their Bitcoin with Coinbase, right? Because that is your actual counterparty, right? Not the big name on the ETF, right? Mm-hmm. And so if Coinbase goes bankrupt, right? And so you got to think, okay, so that's my counterparty. What's the credit risk here? Let me go and look at Coinbase's credit rating. And then you do that and you realize, oh, they've got a junk bond rating, right? And so I'm pushing the boat out. I'm doing something that, my colleagues think are controversial, or my firm, I've kind of really gone out on a limb to do this or whatever. And now I'm taking this thing and putting it with a counterparty that's got a junk bond rating, right? And it's a cryptocurrency exchange. We've seen what's happened to those in the past, right? And I'm taking the risk of not just the asset, but also the custody, right? And so if there's a way to eliminate that risk, right, then obviously you want to do that, right? And in a multi-institutional custody framework, it doesn't matter if one of the key holders goes bankrupt, because it'll be a 2 or 3 or 3 or 5 or whatever setup you've got. And if one of the institutions goes down, you just carry on, you know. So that's another. And the last one I would say is misunderstanding Bitcoin's nature. So not conflating Bitcoin with other cryptocurrencies, because I think a lot of people who got in, the few institutions that got involved in the last cycle, then started with, you know, FTX and NFTs. We saw some of that kind of stuff. And, you know, I think there was, I'm trying to remember, but it was a fireman's pension fund somewhere in the US. And there were, I think the teachers' pension fund in Canada invested in a whole lot of digital assets, you know, thinking they were diversifying their holding and whatever. So again, it comes, you know, really understand the difference between Bitcoin and cryptocurrencies.
I want to thank you for your time today. Glenn Cameron, Global Head of Onramp Institutional. Thank you so much.
Thank you so much for having me, Tim.